Only click go live. Ngoja haiendi. Kuja uone bado 30 seconds ishaisha na haionyeshi, sinafaa kuwa imeanza hapa. 30 seconds hizo ni mingi. So hi everyone, I believe you can hear me loud and clear. I believe you can hear me loud and clear. So everyone, welcome to this broadcast. So welcome everyone, and let's see what we have here in the charts. We can begin by looking at the Forex Factory calendar, whereby we are anticipating the data today at 5 p.m. That is the prelim UOM consumer sentiment and the prelim UOM inflation expectations. So that's the data that we are anticipating today and what we are looking forward to. So that will be happening at 5 p.m. our time. So let's begin by looking at what we have for gold. So basically this is the New York session whereby we are looking at various data in terms of, where we are looking at various charts, trying to analyze various charts, seeing whether we can be able to get maybe some probable entries. All right. So technically, if we begin by looking at the higher time frame, so technically we are looking at gold pushing on the downside, and we are anticipating the price to keep probably the price to continue pushing on the downside, because this is the low that it made yesterday before it retraced to this engulfing. Right, so where it came to was in this engulfing here, where it pushed yesterday, and then now today we have seen the drop of prices. Okay, so just comment whether you can be able to hear me. All right, so we have been seeing the prices dropping, and we are looking at today, we are looking at prices coming to this particular level. That's where we have the low of yesterday. That's around 3119.44. That's where we are targeting the price of gold, at least the first target that we are looking at around that particular point. So in case of any questions, make sure to drop them in the chat. Right, in case you have any questions, make sure to drop them in the chats. Right, so that is the level that we are looking at the prices of gold coming to. Then now we go to the 4-hour time frame. So from the 4-hour time frame, again you can see how the price came precisely to that particular level, whereby we have the OB, and Same case in the lower time frame, I mean in the 1 hour time frame. So it is the same level. We are looking at the order block. This has been a support level that the price, the daily support level that the price broke through yesterday. I mean the other day on Wednesday, and then yesterday we saw the price again push up, reacting to some news, that is the PPI data, and also Powell's speech. So this now means this is where the entry was at this particular point. But again, at that time of the day, of course, it's outside the kill zone. When you're trading ICT, I personally trade ICT. So if you're trading ICT, basically that is not the best time to take some entries. So but that was a key level actually. But now when we come to the 15 minutes time frame, right? So when we come to the 15 minutes time frame, so we had the price push up here at the London during the London Open, right? So we had the price push to that particular point during the London Open, and from this particular point during the London kill zone, the price came here during the London kill zone, then dropped again, right? So we saw the price dropping from there, breaking below again the support for the second time, and then we saw the drop of prices, right? So where are we looking at price coming to there, right? So no doubt, so we are in a bearish trajectory, right? So we have that break of structure. So therefore we are therefore we are therefore we are anticipating the prices to push maybe to this particular level. All right, that's where we are anticipating the price to push to. Before now we see maybe a potential bearish move. All right, so this is just scalping setup, so it's about 81 pips. All right, so that's right now the pip value for gold is quite tight because of the volatility. So this is the place whereby I'll be looking for my setup, because it is during the New York the New York session, right, or the New York kill zone. So that's the first point to look at. Maybe when the price comes to that particular level, we can be able to eyeball our target. At least I usually do 100 pips. So my targets are always 100 pips. So 100 pips will be somewhere around there. So TP1 50 pips, and then now TP2 100 pips. So the moment we take TP1, the key thing is to put a stop loss at break even, right? To put your stop loss at break even, and then now we see what the price does from that particular point. So that's the first thing that we are looking at. So let me set a reminder at that particular point, so that we can be notified when the price of gold comes to that particular level. So that is horizontal ray crossing on the down, crossing up. So we have that reminder set, right, so that we can wait and see what the price does. So then we have GBP USD. This is a GBP USD, and yeah, so thank you, Veronica. You can hear me. So this is a GBP USD. We can have it at that particular point. So this was a probable it was an entry, all right, that the price came here during the London Open today. It was a setup, a very nice setup in the lower time frame. So where are we looking at the price coming to? So we are anticipating the price to come to this particular level. That's where we have the lows of yesterday, right? That's where we have the lows of yesterday. So from there, then we can let's maybe preview the daily time frame. So from the daily time frame, you can see the kind of price action that we have, right? So we see the price here it has been pushing up. Then this is the major low, right, which the price broke below that, last week. This is the major high. Okay, so after that, the price taking out these lows, the price retraced back, and the reason why now we are going to the lower time frames basically to look for our entries, right? So at this particular point, that's where we had that entry today. So basically I'm anticipating the price to come all the way to that. Let's see from the 1 hour time frame. So from the 1 hour time frame, you can see this is how I drew that the order block, because we said anytime you see a doji or a candlestick that has no body, it's not really the best one to use as your order block. So we look at these other candlestick here, basically in terms of you're drawing the order block. Why? Because as you can see here, we have a break of structure, right? Or we have that BOS at around this particular point. Then the price has retraced back to this particular level, and that is actually during the new the kill zone, the London open kill zone. You can see this, the London open kill zone. So the price coming all the way to this particular point, and then now we see that particular entry. So the prices are pushing down, right? So for the New York session, then how do we program ourselves in terms of maybe probably looking for an entry? So I'm looking at this kind of scenario, all right, where we have we want to see the price create that break of structure, right? We want to see that break of structure, and then maybe probably a retracement which will maybe push the price to this particular point, and then now we see a drop. So at that point where it is definitely there is no clear way of entering the setup, so we have to be patient so that now we can be able to for the market to formulate. However, our buyers, we are looking at the bearish trajectory. So the reason why we are looking at some buying some selling opportunities. Okay, so when you look at these other pair, Euro USD, so we can begin from the higher time frame. So the prices here are quite a bit choppy. So we see the price pushing. So we saw the price that particular level, but this is where we had the shift in market structure at this particular point from the daily time frame, because this high never came to this particular point, and then we saw the price break below that high. So the entry for quite where we have been eyeballing, the entry was about that particular level, this buy candlestick there, where we have the order block. Now when you come to the lower time frame, you can be able to see that last buy candlestick that we have there, and then prices have been consolidating, and the consolidation here was very crucial, because it was creating a kind of a pattern, right? It was consolidating in a kind of a pattern, which maybe from the 4 hour time frame you might not see it, but let me try draw it to the lower time frames. But we see how the price comes to this level, even though there is a bit of consolidation, but initially we see the price drop. Remember, I was looking at this particular level, which is a very key level of support as well, because you see the price has tested this level severally, right? So you see the price has tested that level severally. So with that, if you go now to the 1 hour time frame, we are able now to minimize our setup like that. That is the last buy candlestick at that particular point, and we were looking at the prices now coming down to this support level, right? This support level, whereby the prices have been respecting this support level, pushing up for quite some time. Before now we had the downtrend. Okay, before we had the downtrend. So what am I trying to say? I'm trying to say that once the price, I think I had also entered this during our live analysis session, that once we have the price break Once we have the price break above below this, then we are going to see more bearish prices. So but here this was quite a good number of pips, about 92 pips, though the price has been consolidating there, right? So then initially we had the break below this daily time frame, these these daily support level. So after the breakout, the price came to retest, right? And now this is the point where we have our order block, right? That is the point where we have our order block. And this was a very nice setup, right? This is a very nice setup that I traded on Thursday. This was on Thursday, on Wednesday, I mean, right? So, and I'm looking at the prices coming down all the way to this particular point, right? This is where we have the bullish order block. Why am I looking at it that way? Because if you look at this particular point, we see the price has filled the imbalance, then pushing down. So then the next level that the price is likely to come to is this particular point. I know there are some who might be eyeballing the liquidity levels there, but for taking profits, I usually am a bit conservative, and I usually look at this key, the level of the order block. Immediately the price taps the order block, then I take my profits, right? So then what happened? The price pushed down. We saw the price rally on the downside about 88 pips before we saw a retracement. And this retracement too yesterday gave another re-entry using this candlestick, the last candlestick there, which is the order block, because the price has already created a BOS there. So then price tapping back to the order block, and then here we have a very nice nice re-entry right at this particular point. So that was yesterday. So now the price is trading or gallivanting within that particular level. So though we are anticipating a bit of bearish prices, even though now we see the price consolidating at that particular level, there is nothing we can do about consolidation, because we just have to wait until maybe probably we are out of consolidation phase. Okay, so we will monitor, but anyone who has taken the trade from here, basically the key thing is to put you pay yourself something, and then you put your stop loss at break even, right? You put your stop loss at break even. So that's what I'm basically looking at for Euro USD. So I want only to measure on USD pairs, because this is the New York session, right? So when you're talking about the New York session, I'll basically share some few tips about trading the New York session. And one of the things that you need to understand is that the New York session is a bit volatile, right? The New York session is a bit volatile, and what you need to really understand is what time does the New York session begin, right? So you need to understand that we have, even before I specifically delve into the New York session, we have four sessions. We have the Tokyo, we have the Sydney Tokyo, both of them combined form the Asian session, and then we have the London session, and we have the New York session. So the New York session basically begins at around the New York session begins at around 3 p.m. Kenyan time, all right, 3 p.m. Kenyan time. And in terms of EST time or New York time, we are talking about 8 a.m. and it overlaps with the London session, right? It overlaps with the London session. So the overlap is from 8 a.m. to 12 p.m. Okay, so once you have that overlap, that is now the best place for you to look for entries as a trader. Okay, so then You also need to consider the pairs that you're trading during the New York session. We are looking at the dollar currencies, or the dollar being active during the New York session. So what you want to trade during that particular point is the USD pairs. And the reason why I said in this particular session, I'm going to concentrate solely on the USD pairs. Okay, so when you look at um, uh, the reason why again New York is very sensitive is because of the volatility and also the liquidity that it comes in. So here we want to look at the GBP USD, we want to look at the Euro USD, you want to look at anything that has USD, including gold. All right, and also during the New York session we have a lot of economic releases, especially for the USD currency pairs. So like today at 5 p.m. we have some news, the prelim inflation, and also we have the prelim inflation, and also um, we have also the consumer, is it consumer what? We have also the consumer sentiment, right? The prelim consumer sentiment. So that's what we are looking forward to. So that's what we are looking forward to trading, and we will be keen enough to monitor what the price does at those particular points. All right, so if you look at gold, it's tapping our level of interest, so let's look at it. So it's tapping to our level of interest, so let's see what is going to transpire here. All right, let's see what is going to transpire. Let me delete that. So we have that. So when we look at maybe probably the other thing, the best time to trade this session, here we are mostly focusing on um, that overlap, the London and the US, I mean the London session and the US session overlap. That's where our focus mainly is, and that's what we want to basically put a lot of emphasis on, all right, during that overlap between now 8 a.m. to 12 p.m. EST time, and that is between 8 a.m. To what time Kenyan time. So that will be between between let me check. Yes, yes, so between 3 a.m. to 8 p.m. Kenyan time, right? That is the best time to look at it in Kenyan time. So before even we proceed, let's take some time and look at these the dollar index, what the dollar index is doing before we proceed. So when you look at the dollar index, this is the 4-hour candle that has just closed, right? This is the 4-hour candle that has just closed, creating what we are calling a doji, right? Creating, an engulfing candlestick. So we are looking at, in case we have a retracement, a major retracement, so we are looking at that particular level. Okay, so generally we have been seeing the dollar index strengthen. We have been seeing the dollar index strengthen after breaking through. We had seen, or we had this support level. Let me just show you that. So we had this particular level. Okay, so that has been quite a major level for the DXY. Which we saw now the price breaking below that particular level. All right, we have seen prices breaking below that particular level, and it started by breaking below, then we saw the price push up. Of course, we had some insights or some news about we had some news concerning the tariffs, the China tariffs. Once that hissed, we saw the prices pushing up. Right, we saw the dollar index strengthening, and from there we have been seeing coming up, breaking above this particular support. Now breaking above the resistance. Initially it was support, then support being broken becomes a resistant. So then now we saw the price push up again, break above that point of resistance. Right, so what are we seeing at the moment from the daily time frame? We are anticipating more bullish prices. Okay, so the price after breaking up came back again to retest this particular level, the candlestick that we have here, which is more of an engulfing, although the price opened with a gap. The reason why it's not really that much precise. Then we see the price is pushing up. So when you come to the 4-hour time frame, like I said, we see the 4-hour time frame closing as an engulfing. So of course, when a new candlestick begins, I want to see the price retrace a little bit before now we start seeing more bullish prices. Okay, before we start seeing more bullish prices, you might see a little bit of retracement. When you look at it from the daily time frame, you can see this was now a bullish engulfing. Right, I mean was a bullish pin bar candlestick that has closed for last hour. So what I'm considering, in short, what I'm looking at here, I want to see more bullish prices. Okay, so in case the price retraces, then we are looking at this kind of a retracement. Right, we are looking at that kind of a retracement, the price coming to this particular level. Let me just delete this because you can see here we have a clear break of structure. Right, at this particular point we have a clear break of structure. Let me mark that we have a clear break of structure. So then we want to see the price, in case it retraces, then we want to see the price push maybe to this particular level before we start seeing more bullish prices. Okay, that's where we want to see the price come to. Then we start seeing more bullish prices. Okay, so the same can be very much viewed it's very, you can be able to see the same in the lower time frame. So we can minimize the that, because that's where we have the BOS, so the price can be able to come all the way down to this level. Okay, so again, being a Friday, you need to understand Mondays and Fridays sometimes can be quite tricky. So the reason why really understanding the markets becomes very of key significance. Why am I saying that? Because you realize that anytime maybe probably we have let's say maybe an example of a bearish week. Okay, if we have a bearish week, we want to see the price open. Right, once the price opens, then we want to see the price manipulate, and once the price manipulates, then we want to see the price take the intended direction. Then now we want to see the price do what? Retrace and close at that particular point. Right, so that is the retracement and I mean retracing and what the manipulation. So this is what we call the opening. Right, the open, others call it consolidation. Right, because the price sometimes opens with consolidation. Then this is what we are referring to as the manipulation. Right, the manipulation. Then now we have the distribution. Okay, so we see the price now distribute, and then now after that we see the price close. So looking at it on a weekly time frame, this basically happens on a Monday. Right, so on a Monday we want to see that kind of action. So price opening up, manipulating. Right, then before we see the distribution. Okay, before now we start seeing the distribution of prices. Okay, so that is the distribution, and then now we see the price closing at some point there. So we have these three phases are very important. The manipulation, I mean the accumulation. All right, the accumulation. Then we have the manipulation. Right, we have the manipulation at that particular point. So let me just extend that, and then here we have now the distribution. Okay, here we have the distribution. Okay, so on Mondays mostly the price does what we are calling the accumulation. Then it manipulates to create that is when to create the high of the week. All right, if you are bearish, to create the high of the week. And this high of the week can happen on a Monday, Tuesday, Wednesday, right? Monday, Tuesday, and Wednesday, right? Monday, Tuesday, all the way to Wednesday, latest Wednesday. So then now we see price distributing, starts to distribute all the way down, and then now on Fridays, sometimes we can have retracement. So even though we are having a bearish week, sometimes on Fridays, especially the New York session, you might see some bit of a retracement on the upside, or maybe during the London close, so that now it can complete the candlestick formation, because this information represented in a candlestick, that's how it looks like, right? If we present this information on a daily candlestick or a weekly candlestick, that's what we are going to have. All right, so understanding this even when you're trading, especially if you use ICT, is very, very significant. So this is the open, right? Then the manipulation, then the distribution, all the way down to this point, then price retraces to close at that particular point. Okay, so that's what we are looking at, or that's a key concept that you really need to understand when you are looking at the markets. Okay, so with that now, maybe probably you can begin hearing your question. If you have any questions, just type them in the chat. All right, just type them in the chat. So that is called power 3, right? That is called power 3. So it's called power 3. So that's how the price works. So in case now this is a bearish sentiment, right? In case we are looking at this is a bearish bearish week. Okay, so in case we are looking at a bullish week, then what we want to see is the price open, right? We want to see the price open. Then we want to see manipulation, that is basically price looking like it's selling so as to trap the retail traders. Then we see the price distribute in its normal direction, and then there we see the price retrace and to close at that particular point. Okay, so this is now what we are calling the open, right? That is the open. This is the open. Then this is the close, right? This is the closing of the candlestick. Okay, so if now you are to present it in terms of the power 3, so we want to see that the open or the accumulation, right? So after the accumulation, then we want to see the manipulation phase. After the manipulation phase, then we want to see the price do what? Distribute. Okay, we want to see the price now starts to distribute. Okay, so this is now what you are calling the accumulation phase. Okay, then we have the manipulation phase. Okay, the manipulation phase, and then now we have the distribution phase. All right, we have the distribution phase. Okay, so that's power 3. And if you present this information now in a candlestick, that's how we will have it, like that, right? So we will have like that, and this now will be a bullish candlestick, so meaning that the open is at this particular point. That's why we have the open, price opening at this particular level there. Then now we have the closing of the candlestick here, right? This is the close, right? So maybe I can use an arrow to point. So this is the open. Okay, that is the open. Then this is the closing price. All right, this is the closing price. Okay, the closing price. So that is when we have a bullish sentiment, or when we have a bullish week. Okay, So that's very important for you to be able to understand, okay? To be able to understand so that you can be in a way that you are able to position yourself accordingly, right? You are in a position whereby now you are able to understand what's happening, what's happening in the market, right? So that you can be in a point to understand exactly what is happening in the markets. So once we have that, then we can be able to see maybe probably when you try to go and look at the biases of the day or maybe the weekly bias. So let's maybe probably look at maybe a currency like GBP. Let's say maybe GBP USD, GBP, GBP USD. So when you're looking at a currency like GBP USD, right? So now you start looking at your analysis, right? When you start looking at your analysis, you come here now and begin from the monthly, okay? That is now doing the top-down analysis. So you begin from the monthly. So when you look at it from the monthly, now you see that on the monthly time frame, we are looking at a bullish scenario, at a bullish sentiment. All right, you are looking at a bullish sentiment. So because the price tapped this level, we had a break of structure here. So the price came to this particular point, this order block here, tapped into that order block. Then we see the price rise, and we were looking at the price to attack the buy side liquidity. So once the buy side liquidity was attacked, then we have to see the price retrace. So our working range or our trading range will be now the high that the price has created and the low that the price has created at that particular point. Okay, so that now becomes our working range. Okay, that becomes our working range. So with that that being our working range, so what we look at is now how far the price can be able to retrace to this level, and now that's where you come and take your Fibonacci from the lowest to the highest, and now you're able to identify that these particular levels, the price is likely to come to this particular point, because this is the level that we look for entries, right? So then now we are able to you can delete our Fibonacci. So we are able to know, even if we are selling, then we are able to know how far on the monthly time frame that the price can be able to push. Okay, so you can narrow that down on the weekly time frame, and you'll see this is a point of interest as well. You can see that sell candle. You can be able to even narrow it on the daily time frame, and around this level we have a fair value gap, right? We have a fair value gap, both sides. We can have an inverted fair value gap or the normal fair value gap. So the normal fair value gap, we are looking at that to that, right? This, the low of this candle and the high of this candle. So here we have what we are calling an FVG, right? We have what we are calling a bullish FVG. So this is the level whereby we might anticipate the price to reach to before we see maybe probably a buying scenario, right? Before we see a buying scenario. So with that, then now we can come here and see what the price is doing. So of course, if we are looking at this kind of scenario, then we want to see the price come here, because almost here, this is the daily time frame, we have almost equal lows, this low of Thursday and the low of Wednesday. So meaning that we might anticipate the price to come to this particular point. Okay, so we are looking at the price coming all the way to this particular point, basically to take out the liquidities, right? To take out the liquidities, the equal lows there. Then we can come to the 4-hour time frame, and now from the 4-hour time frame we can be able to see now how the price is doing precisely, right? So we are able now to see that the BOS, right? We're able to see the BOS there. then price pushing again to now price retracing back to this particular point. That is on the 4-hour time frame. So we are looking at the price coming to take these liquidity levels, like we began by looking. So we are splitting the price to come to this particular scenario or this particular level. So once the price comes to that particular level, then what we will be looking at is a situation whereby now we want to see the price take the liquidity. Probably we might see the price something like that, then price retrace maybe to this particular order block, and then we continue seeing more lower prices to this particular level, right, to this particular level. Okay, so once we have that and maybe take a sell from this, then what we'll be looking at, for me, I'll be looking at taking profits at somewhere at that particular point, because that's why I have an order block there. So then I wait for the price maybe to dig deeper into the zone. Why am I looking at that? Because here I have a BOS, right? So meaning that this level we might see some bit of a slow price or a retracement or maybe a pullback from this particular level. So then when you go to the lower time frame, maybe probably the 1 hour time frame, now you'll be able to see why I said today there was an entry for GBP USD. We have that break of structure, and then we had the price respect this particular order block, right, priced up into that order block, and then now we see price pushing. I think it has pushed down about 40 or 50, 40, about 40 pips, so still pushing down, all right, and the target should be these liquidity levels that we have there. Okay, so this point here was activated during the London kill zone, right, during the London kill zone. So my anticipation is for the price now to push down to this level, and the moment price breaks this level, then it might insinuate more bearish prices, right? So but now how do we eyeball our entry? So we want to see the price break, like I said, below this level, then maybe probably now retrace. Once it retraces, then we will be using this as our entry, right, that level, that order block. So but remember, the price has to first break below that point, then now we see the price push back to that level before now we can take a potential sell setup, right, before we can take a potential sell setup. And this is how the potential sell setup or a re-entry of these can be, right, like that, and targeting maybe the low where the price reached before now we had a retracement, right? So that's how I will be, or that's a potential setup, even though it might not materialize today, maybe probably tomorrow on Monday or Tuesday. So it's something to keep a close look at, right? It's something to keep a close look at. So when we come to the lower time frames, like I was saying, now that we have had the price break, remember now this is scalping setup. Now that we have had a precise BOS there, all right, when you come to the lower time frames, you are looking at scalping setup. Okay, so now I might want to see, or I'll be looking at the price revisiting this level, right? So, and these can give a potential selling opportunity, just like you can see here. Let me just push this aside. Just like you can see here, we had the price take these lows, all right, then retraced back to this order block. Okay, so and you can see when the price was retracing back to this order block, okay, for that re-entry there, it was during the kill zone, right, during the kill zone, some few minutes before we began the session. So you can see the price comes there during the New York kill zone, and right now if someone could have taken that, we could be talking about something to do with around more than 20 pips in profits, all right, more than 20 pips in profit. Now how do we re-enter? So we mark that now as our entry, as our order block, and then we wait to see the price retrace to that level, and from there now we can be able to eyeball some selling opportunities like that, right? We might be able to eyeball that, and we will be targeting the lows here, these lows here, we can also target below to this particular point, right? We can target to these particular levels where we have this liquidity. We can target it to that particular point. Okay, but it's good to take partials when the price because these are 1:3 risk to reward ratio setup. So definitely the moment the price reaches uh, your level, let's say maybe probably half of your target, you take profit. Remember, these are currencies, they are not quite they are not really much volatile, but you are talking about a cool 36 pips. Okay, so the trick with forex is basically looking at or being in a position whereby you are able to take to trade consistently. Consistent is what really matters in forex trading. Like I always say, I borrow it from the scripture that the scripture says you work out your own salvation with fear and trembling. So the same way with forex, I now borrow that and bring that into forex and say that we work out you work out your own forex trading journey with the discipline, right? With the discipline and consistency. So when you look at euro USD, so looking at it from the monthly time frame, what are we seeing? So we are seeing the price, the same case, the same thing, right? So we see the price coming out, sweeping all those liquidities, and then now we see the price trying to push on the downside. So how far can it be able to push on the downside? So we are looking at that particular level. That's where we have the weekly OB. Yes, it's the sell candle, but because of risk, definitely the reason why now we are extending up to the week there. All right, so then we come to the weekly time frame and we see how the price is doing. So from the weekly time frame, now you can be able to minimize the risk to that particular point. So the price has already created a BOS, so we want to see the price come all the way down to this particular level. Even if you take your Fibonacci from the highest to the lowest, you see this this particular point, this is where now the price is already in a discount. All right, so we on the discount levels, that's where we want to look for your setup, your buying setup, right? At this particular point, we have the fair value gap. So most of the time when we have those fair value gaps, sometimes we can see the price maybe jump or dig deeper, maybe probably to this particular level here before now we push higher. So for me, I'm an order block trader, so that's how I want to see my setup. We already have now these BOS that has taken place there, so I want to see the price dig deeper to this point before now to the order block before taking the trade. So when you come to the daily time frame, now we start seeing a different of course how the price has been pushing higher highs and higher lows. Right, so this is the previous or the major low here before the price pushed to that particular point. Okay, so again, then at this particular point we have our order block level. Okay, so even before the price now comes down to this particular point, then the immediate level that we want to look at is this particular level here. That's the immediate level that we are looking at. So then we now stream down to the 4-hour time frame. So from the 4-hour time frame, like I said on Wednesday, we had a very nice setup. We saw the price break structure there. I'll create the BOS. We saw the price create the BOS. So once the price created that BOS, then we have price tap to this particular level. Right, so you can see price coming to that particular zone, and that's where we were eyeballing the cells. Right, that's where we are eyeballing the cells, so targeting the price to come down to this particular point. A risk to reward ratio of 1:4. Right, a risk to reward ratio of 1:4. So you can even see the kind of candlesticks here. The 4-hour candlestick, we are about 8 minutes for the next candlestick to close. Right, so of course now with this kind of a setup, the price has dropped all the way down to this level before retracing or pushing up again, more of a consolidation. So now in the 1-hour time frame, now you're able to see clearly. That's where we have that. Right, that's where we have that order block, the price tapping into that order block, and then now we are pushing on the downside. Okay, we are pushing on the downside. So with that, How do we now maybe probably eyeball some entry? So if someone was not in this trade, so the reason why now we are going into the 30 minutes time frame, right? So we are going into the 30 minutes time frame. Let me delete this. So we are going into the 30 minutes time frame basically to be able to look at some potential setup. And again, just like GBPUSD, you're able to see here we have that break of structure, the BOS. So this was the order block, the price coming there during the New York session, all right, or the New York Open, all right, and then now we are seeing the prices drop. So when maybe probably you push to the 5 minutes time frame, you're able to minimize your risk. You're able to minimize your risk to that particular point, right? You're able to minimize your risk there, and you can see now how you have a very nice entry there. And where are we targeting? Because now if you are looking at scalping setup, of course you are targeting the London lows, right? So that's about 15, about 17, 19, 20 pips thereabout. Okay, but look at it also in terms of risk to reward ratio. Before you get the 17 pips, before you say the 17 pips are small, how much are you risking? About 5 pips. That's what we are risking. So 5 pips to get 17 pips is a risk to reward ratio of more than 1 is to 3, right? So the trick here is now when your lot size, when your risk level is small, then you tend to increase what your lot size. Okay, when the risk level is small, then you tend to increase your lot size, and when your risk level is big, then you minimize your lot size. Okay, you minimize your lot size. So that's basically the major trick that you look at in terms of risk management, right? So now with that, as you can see, the prices are looking somehow choppy. As you can see, there's no that big momentum, so they look choppy. So what we want to see is the price drop beyond this particular level, right? So once we see the price come to this, remember we are saying this is where the entry was supposed to be. Our stop loss slightly above that particular point, targeting these levels. So of course now someone could have taken partial because it was more than the half level. So what now we are looking at, or what we want to see, is the price drop close below or take these liquidities, create a BOS, right? Then maybe probably a retracement to this level, and then we see a drop. So that level is very important because that's where now we have the order block, the last sell candle there, and then now we might see the price drop. That will be only valid if the price now takes out the liquidities at this particular at that particular point. Okay, so that's basically how you analyze. All right, that's how you basically analyze the markets. So before we delve into the analysis, we were looking at I was giving some key insights in terms of how to approach the New York session. So you find that during the New York session, that's where we have major data releases for the US, because that's when the US session is quite active during that particular point. So you'll find datas like NFP, whatever, so many datas for the USD, and to get all those type of datas, you look at the forex factory. That's where you are able to get all see all those particular, all of the data that is maybe about to come. Like if you look at today, you can be able to see we have the USD data at 5 p.m. That is the prelim UOM consumer sentiment and the prelim UOM inflation expectation. So we anticipate at that particular time we might have some bit volatility, because any inflation data and also the consumer sentiment, it's a bit volatile, so we might see some bit of volatility coming into play at that particular moment. And so some few minutes before, or some maybe before the news are released, if the news are of very much significant or heavy impact, then what we always witness is some bit of consolidation or manipulation before the news are released, right? So that is very significant for you to look at as a trader, right? So we have I think about 4 minutes remaining. So if you have any question for me, you can just write it in the chat. Right, if you have any question for me, you can just write it in the chat and I'll be able to answer you. Okay, I'll be able to answer you. So let's see how GBP USD, let's see how it's doing. So you can see now after creating the BOS, it's trying to push up again. So let's see whether maybe probably it's gonna come to this level. So if you look at this risk here, we are talking about 12 pips, not bad. So remember this level you had marked from the 15 minutes time frame. These are 15 minutes OB. So when you come to the 5 minutes OB, then these were the 5 minutes OBS at this particular point. So sometimes the price can dig deeper to this level, but 12 pips not really bad, right? 12 pips not really bad. It's quite manageable. Okay, it's quite manageable. For currency pairs, I usually look at 20 to 25 pips at most. For those that have Euro USD, I mean those that have JPYs, I basically look at between 20 to 30. I give another margin of a margin of a margin of five a margin of a margin of 5 more pips. So that's we are talking about 20 to between 25 to 30, right, for the JPYs. Okay, so that's what we are monitoring. That's what we are looking at. That's what we are monitoring. So yeah, so I'm trying to put, just a minute. Just a minute, just a minute. All right, so let's maybe probably have a peek of maybe AUD USD. It's a pair that I've been following actually with some good entries this week. So the key thing is to begin from the higher time frames, right? So from the higher time frame, you can see the price pushed up to this particular point. Then we saw the price pushing on the downside. So I was looking at buying opportunities. I was looking at selling opportunities. So, and the entry was here. I think I'd showed you this yesterday during our live market analysis. The price coming to this OB on Wednesday. So I think on Wednesday we had so many entries, and my target was the price to come to this particular point. Okay, because we had a break of structure here, so this is a valid or a high probability order block. Okay, so I'm still looking at the prices coming down to this particular level. Remember, for me, I don't swing trades, so I'm a day trader or a scalper. So I exited on this position the same day after it gave me what I was looking at on Wednesday. But I said, in case for those who swing trades, this was a very nice one to look at in terms of swing trading. So again today you find that this pair also gives us a very nice setup again. Maybe I can push these aside. So you find that it gives us a very nice setup during the new Asian session. So we have here the breakout. Then we see the price coming to this particular OB, tapping into that OB. If you go to the 15 minutes time frame, yeah, the entry was during the London kill zone, right? During the London kill zone. So, and then now we can have something like that. Okay, why that? Because we are looking at the time frame that you're taking the trade. You are looking at where we had the BOS, right? So somewhere there we had the price break. Then now we want to see the price come to this particular point. Okay, so and that's what we have there, and from there right now we are talking about 28 pips in profits, right? We are talking about 28 pips in profit. So that's what we are looking at, or I mean that's how you scalp or you look at day trading setups, right? So for now I'm anticipating the price maybe for me to be able to look at more buying opportunities, I mean selling opportunities. I just first of all want to see the price break below these Asian low, this level of yesterday. Then now I mean this today's level. We can actually look at this because they are close, very close to each other. And then now after that you might see the price retrace to an order block, maybe to around these levels again, and then now we might be seeing more lower prices. Okay, we might be seeing more lower prices, though I'm not really a fan of AUD USD because of its small pip value, and also because it doesn't really have much volatility, so I don't really focus on AUD USD as much. Okay, but it's a good pair, especially as a beginner, to look at, because it can really you can really blow account using these using the Euro USD, right? You can really blow account using the AUD USD, so it becomes a good one to look at in terms of especially you being a beginner. It becomes quite a very nice one for you to look at or to start trading with. So then we can look at Nasdaq. Let's see, someone asked about Nasdaq. I'm not really a fan of Nasdaq, but let's look at it. So Nasdaq, we have been looking at bullish prices. All right, we have been looking at bullish prices. So remember, these indices are really tanked. This was the effect of the tariffs, prices coming all the way down here. Remember, what goes down comes up, and what goes up comes down. So this is the level that the price tapped, and that is the breaker block, right? That is the breaker block, tapped into that, and then now we see the price push up again. So where are the prices going? We might be seeing another all-time high, right? Because we have an all-time high at about 22,231, right? So the same case we are seeing from the monthly time frame, you see that rejection candlestick. This monthly, the April candlestick was much enough to give us a bullish sentiment this month. Okay, because it's a bullish pin bar, and anytime we see a bullish pin bar, then we anticipate to see prices pushing on the upper direction, and we might be looking the prices come to take this particular level. We might be seeing prices coming to that particular point. Okay, so then now we can go to the weekly. So from the weekly time frame, we are seeing the same scenario, right? So that's where we are looking at the prices coming to. Okay, maybe taking those liquidity levels. They are creating another all-time high. On the daily time frame, we are just also looking at the same scenario, but you can see the yesterday's candle closed as a long-legged doji. This signifies indecision, right? So this signifies indecision, meaning that price can either go up or can go down. But based on what we had, we were in a bullish trajectory, and the reason why we are looking at the prices maintaining the same. So now here we are looking at that particular level. That's where maybe in terms of order block, that's where we are looking at the price pushing up to this particular point. Okay, so if anyone is in buying momentum, then the key levels to look at is here in terms of taking your profits, and also at these levels we might see some bit of retracement, okay, or pullback depending now on the price action that will form at that particular point. So how do you now start hunting at because you have seen monthly, weekly, daily, we are bullish, so meaning that when we come to the 4-hour time frame, then we are looking at a bullish sentiment. And the first thing you start seeing here, we have a BOS. Then where did the price pull back to? This order block. And then now we see the price pushing up. So where are we? Where is our immediate target? The liquidity levels there. That's where we are looking at the price reaching to at about 21453.92. Then now you can drop down to the 1-hour time frame, and now this is how you could have minimized your risk there in terms of entry, right? We have that. So we see the price pushing up, creating that BOS. So the price tapped the 4-hour OB, then it went higher. It didn't really reach the 1-hour OB, right? So now from here, two things are likely to happen. So we want to see the price push up and break above that point, okay, then giving us a scenario of more bullishness. So after the body of the candlestick closes that, so that's what I'm trying to look at next week. So then we see the price retrace, right, to some levels. Then now we see the price, we continue pushing higher, okay, we continue pushing higher. All right, so that is because that we are in a bullish trajectory, right? We are in a bullish trajectory. So but even if you're looking at it from this 1-hour time frame, before the price gains the momentum to come to that point, here we already have a break of structure, right? So the key thing for you is to be able to identify the structure. The moment you have the structure with you, then it becomes easier even for you in terms of looking for entries. So now with this, then we have this we can say this is the order block. The entire of that is the order block, but just to minimize the risk, we can use the engulfing, right? We can use the bullish engulfing. So this is a point whereby I might eyeball some entries, some long entries, right? These maybe probably might not materialize today, maybe next week, right? Maybe next week. So, and I'll be targeting now the highest point where the price will be coming from, maybe there, right? But of course it's good to take partial within, right? It's good to take some partial trades or some partial profits within. So this is the level that we'll be looking at in case the price drops to this level. That's where we'll be looking at buying opportunities, okay. So you'll see this is quite significant also in the 1-hour time frame, I mean in the 30 minutes time frame, and also in the 15 minutes time frame. It's quite an important level to put in mind, right? It's quite an important level to put in mind, basically to eyeball the buys, all right, to eyeball some buys. But what we are looking at is a bullish sentiment. So we are looking at more bullish prices, okay. We are looking at more bullish prices for the Nasdaq, not unless anything happens in the markets whereby maybe probably we might maybe in terms of tariffs, what I call Trump shenanigans, or basically anything that Trump might mention, that or anything that might happen in the market that is able to affect these markets, the Nasdaq. Also, when you're trading the indices, it's important to be aware of the earnings report, okay. So you're able to understand, you need to understand which companies, which 100 companies does NAS 100 track, right? So then you're able to go now and look at the earnings calendar and now see the companies that are poised to release their earnings that are tracked by NAS 100, because it will definitely affect the volatility of these NAS 100, okay. So that's maybe the insights. And also the USD news, they are also likely to affect, they definitely affect the NAS 100, okay. So I believe I've answered your questions clearly. So if there is no any other question, then I have a meeting at about 4:30. So you'll allow me to end at that particular point. Like I said, I'll be doing more of this, especially on Fridays when we don't have sessions. Or yeah, maybe on Fridays when we don't have session, I'll be doing more of this because uh, it provides some key points of learning, right? Maybe probably you're able to learn one or two things, and also give you the confidence, maybe to yeah, to gain the confidence and also to improve your psychology. Okay, so but in summation, all you have said in the New York session, what you are looking at is you want to know the time that the New York begins, so that is 3 p.m., right? And during the overlap from 3 p.m. to 8 p.m., when the New York session overlaps with the London session, that is the best time to look for your entries. Okay, that is the best time to look for your entries because there is a lot of volatility, right? And now you want to focus on the USD pairs and also the card pairs. Okay, so the Euro USD, the GBP USDs, the USD JPY, maybe the USD CHF, the USD card. So anything that has USD, it's best to look at during the New York session. And also in the New York session, you should be wary of now the US USD data, because most of the USD data is released during that particular session, right? During that particular the New York session, right? So that's maybe probably some insights in terms of trading. So irrespective of the strategy that you trade or the strategy that you use, those are insights that are very universal irrespective of which strategy you are using. Okay, so thanks guys. With that, you'll allow me to end it there, so that I can jump in another meeting, because I can see there is no any other question. Right, I can see there is no any other question. So